Vital Knowledge founder Adam Crisafulli. Talk about these markets. Adam, that's not exactly great if you're bullish to see the S&P close up just 1% after the stronger rally during the day. What do you make of it?
Yeah, so I think what happened over the last several days, it certainly inflicted a lot of psychological damage, and so finding a base off of what happened, it's going to be a process. It's going to take some time. Markets are going to want to see stability over the course of several days going forward, not just a single sharp V-shaped rally. If anything, it's probably a little healthier if we have a series of more modest gains rather than a giant V-shaped move on a single session. So it's more of a process than I think it's a street session. And we're going to have to kind of sift through some more earnings, get some more economic data, hear some from some more Fed officials, just get a better sense of where the macro landscape lies right now.
Which matters more?
In the last 12 hours, sorry, go ahead.
Which matters more right now? The earnings, the micro that we're getting, perhaps a consumer read from, or the macro data?
I think it's a little mixture of both. I think we've had some earnings reports out in the last 12 hours that were somewhat encouraging. So Caterpillar, CSX, Yum Brands, Uber, some of these major companies with big footprints in the economy, some of them are acknowledging headwinds. The biggest theme from this earnings season has been companies cutting costs to offset revenue headwinds to drive margins and earnings. So there definitely has been a slowing and cooling in the economy, but corporate America is evolving in response to it, and they're generating reasonably healthy earnings. The jobs report on Friday certainly, I think, reflects a downtick in employment momentum. We'll have to watch the weekly claims closely, but the economy is not collapsing by any means. The services ISM yesterday was healthy. The Atlanta Fed today updated its GDP forecast to nearly 3%. So I think the economy is on a reasonably sound footing, and the rate cutting process is, it's going to start in about a month or so. Probably not 50 basis points just based on everything we're seeing, but 25 basis points and more to come in the coming quarters. So, reasonably supportive backdrop, I think, for equities.
Okay.